You hear a lot of people saying that they have a trading strategy with a 70% win rate and a risk to reward of 1 to 2 or more. If you hear anyone say this about their trading performance, you will learn in this video that they are lying or basing it on too few trades and not over a long period of time. I will show you why they are lying, and I also will fix your expectations for trading because they are most likely unreal. In the end, I will show you how to be able to withdraw $3,000 per month using a 50% winning strategy with a risk to reward of as little as 1 to 1.2. I've been a full-time trader now for over 4 years, and I always find it so funny when people say they win 70% of the time with a 1 to 2 risk to reward or more. Often when people mention their statistics or brag by posting screenshots, they almost always base it on just a few trades, or they show a screenshot of them passing, for instance, the FTMO challenge in 2 days in 8 trades. We all want to be a consistent trader, earning money month after month, year after year, not just 8 trades. So I'm gonna show you a spreadsheet where I have simulated both a 70% win rate and a 50% win rate with various risk to rewards, from 1 to 1 up to 1 to 5, and using 200 trades to showcase how the profitability would be over time. First, we take a look at this spreadsheet showing a 70% win rate and a risk to reward from 1 to 1 to 1 to 5. We start with a $100,000 account balance, which is easy to get through any prop firm as long as you have a winning strategy. And we risk 1% per trade. This means that in a 1 to 1 risk to reward we risk 1% and win 1%, and in a 1 to 5 risk to reward we risk 1% to win 5%. Yeah, you got the picture. In the win-loss column, 1 means a winning trade and 0 means a losing trade. I have randomly placed the trades to achieve a 70% win rate. In the middle, I simulated 15 losses in a row to see how the equity curve is affected by a bad streak of losses. Let's go through how much money we would profit after 200 trades in either risk to reward scenario. Remember, we start with $100,000 in all examples. Using 1 to 1 risk to reward, we profit $120,345, 1.2 times invested money. 1 to 2 risk to reward, we profit $775,257, 7.8 times invested money. 1 to 3 risk to reward, $3.3 million, 33.3 times invested money. 1 to 4 risk to reward, $13.1 million, 131 times invested money. 1 to 5 risk to reward, $50.5 million, 505 times invested money. By looking at these numbers, do you still believe that anyone has a trading strategy with a 70% win rate and any of these risk to rewards where the lowest is 1 to 1? You might still think that both the 1 to 1 and 1 to 2 or even 1 to 3 risk to reward scenarios look realistic. Think again. If you have a strategy that wins 70% of the time with a minimum of 1 to 1 risk to reward, wouldn't you be willing to risk more than 1% per trade? I know I would. So let's change our risk from 1% to 3%. This is 3 times higher risk but also 3 times higher reward to see how this affects the outcome. So, in the 1 to 1 risk to reward, we risk 3% to win 3%, and in 1 to 2, we risk 3% to gain 6%, going up to the 1 to 5 risk to reward, where we risk 3% to win 15%, which are huge numbers, but still, if you win 70% over the long term, it should not be a problem for you. Using the 3% instead of 1%, now the profits looks like this. Using 1 to 1 risk to reward, the profits are $908,128. You have increased your account 9.1 times. 1 to 2 risk to reward, profits are $56 million. You have increased your account 560 times. 1 to 3 risk to reward, $2.7 billion. Your account increased 27,925 times. 1 to 4 risk to reward, $124 billion. Your account increased 1.25 million times. 1 to 5 risk to reward, $5 trillion. Your account increased 50.5 million times. I think this really gives you a clear view of how unlikely there is to have this win rate combined with a 1 to 1 or higher risk to reward. And I proved this by increasing the risk from 1% to 3% because the numbers then get out of proportion and speak for themselves. So, next time you see someone do a post saying that they have a 70% winning strategy and a 1 to 2 risk to reward, or any of the numbers I just showed you, you know it's over a short period of time or just a cherry pick of their trade and has nothing to do with their long-term performance. My experience after making hundreds of trading robots, backtesting millions of trades and manually doing thousands of trades over the last 4 years has shown me that the risk to reward and win rate goes hand in hand. Higher win rate, lower reward compared to your risk. Lower win rate, higher reward compared to your risk. What I wanted to achieve with this video is to open your eyes to more realistic goals that actually are achievable. So let's do this now. I want to make this more understandable by showing how realistic statistics combined with account size would look like if your goal was to withdraw $3,000 per month. We will again use a $100,000 account. In the example, I'm gonna show you that if you have a win rate of 50%, how much does your risk to reward need to be and how big of an account you need to have to be able to withdraw $3,000 per month using 1% risk per trade. We simulate this by using 40 trades, which is 2 trades per trading day. Using 1-to-1 risk to reward, with a 50% win rate where you risk 1 to win 1, you will more or less end up at your starting balance depending on the order of your wins or losses. In this example, we actually end up with $200 in losses. This is because we risk a percentage and the wins and losses order can produce this result. If we would have risked a fixed monetary value and have a 50% win rate, we always end up with the same amount. 1 to 1.1 risk to reward, $1,795 profit. You have gained 1.79% profit, which doesn't reach our $3,000 goal. 1 to 1.2 risk to reward, $3,828, which gives us 3.8% profit, just above our goal. 1 to 2 risk to reward, $21,537 profit, 21.5% increase. 1 to 3 risk reward, $47,723 profit. This gives us a 47% profit, which is insane numbers if you could do that consistently. I doubt you can. So even in this 50% win rate scenario, we see that 1 to 2 and 1 to 3 risk reward produces insane results, which are unlikely to achieve. If we were able to compound 47% profits month after month, we would have earned $105 billion after only 3 years. Think about that. What I want you to take away from this video is that if you can have a strategy that wins 50% of the time and a 1 to 1.2 risk reward, not 1 to 2, 1 to 1.2 risk reward, which means you risk 1,000 to gain 1,200. You can withdraw more than $3,000 per month if you start every month with a $100,000 account, which you can get from a prop firm like FTMO. Happy trading!
If you liked the video, consider hitting the like button and subscribing to this channel to see more of Robert's fantastic videos. Ha ha ha.